from losing value over time? And the answer is that if we had a hypothetical savings account, one that was, let's say, an interest rate of 2.5%, that would match roughly the rate of inflation. So inflation means everything goes up by 2.5% in terms of price, but our money in our savings account also goes up by 2.5% each year. Therefore, we're technically not losing money over time. If you're watching this and you have an issue with the word interest, then don't worry, stick to it for now. Investment is not the same as interest, but we'll come back to that a bit later. But the point here is that we don't just want to not lose money, which is what happens at our 2.5% rate. We actually want to make money. And that brings us on to question number 3, which is, well, how do we actually make money? Now, let's go back to our hypothetical savings account. If hypothetically we could have a savings account that was giving us a 10% interest rate, this would never happen because that's just way too high. But hypothetically, if it did, that means that every year we'd be making 10% of the value of the money in our savings account. So for example, if I were to put £100 in a savings account right now, then next year it would be worth 110. And then the year after it'll be 121 because it's 10% of then the 110. And then it would be 130 something. And this would very quickly compound so that in 10 years time, my £100 will have become £259.